Happy Taco Tuesday, everyone. Hopefully everyone is doing great this awesome Tuesday morning. It is 10:23 a.m. and the market, she's mighty green. Yeah, I mean, the market's definitely green on my positions. Pretty much my watch list. The major indexes are green. We got Bitcoin a little green. We got the volatility index down 10%. But oil is still above $100. I'm going to try to keep this video under 17 minutes. My video from yesterday was definitely very lengthy. Not to mention my Sunday's video as well, too. If you are new here, welcome. I try to put out videos Monday through Saturday on this channel. If you enjoy my content, please smash the like button, entirely free, and subscribe for more videos. This YouTube channel is definitely relatively new, so please help it grow. Probably next month, I'm going to advertise this YouTube channel among my other YouTube channels. One of my YouTube channel has over 200,000 subscribers. Not a stock-related channel, but, I mean, the stock market is very popular among just about any demographics of people. So we're going to be getting some more daily viewers on this channel over here. Otherwise, today, I kind of really want to talk about what Jerome Powell was saying yesterday, because he did speak at Harvard, and what he said may actually be impacting the market right now. We actually did not get any economical data. Friday is going to be relatively very big because, well, we have the unemployment rate coming out this Friday. And then next week is going to be pretty much all inflation reports. April 1st, April 3rd. Unemployment rate, this is going to be very big. If it does not come in line, honestly, it really depends. Because if it doesn't come in line, and if the unemployment rate could be very well ticking up, that could maybe be signaling a rate cut. But honestly, because we have so many different factors going on right now, which honestly is a little bullish. I'll talk about that momentarily. But we have so much negativity that even if the unemployment rate does tick up a little bit, maybe it's not going to be like last year where the unemployment rate was ticking up and we actually did get a December rate cut, primarily because of that factor. But as for next week, after pretty much Easter Monday, nothing scheduled. We have a lot of inflation reports. Obviously, Thursday, PCE is going to be a big inflation report. And this is pretty much going to be very, very much the end of Jerome Powell. Very much like in being the Fed chairman. We're going to be having a new Fed Gov coming in May. Actually might be June until his first actually speech, because he has to go through an acceptance process. But basically, pretty much, I want to just cover what Jerome Powell said yesterday. And by all means, if you actually want to utilize AI as a tool, which I highly recommend anyone out there to really do, understand that AI, whether it's Gemini, I primarily use Gemini. ChatGPT is also great. Use AI the proper way. AI is a tool for gathering information. Understand that obviously AI needs to be taken with a grain of salt, and there are so many people that believe AI is being used in the wrong way. It really depends about the person. I use AI to basically pull information from the internet. And I did check a lot of these sources that Gemini actually did provide, which is definitely really good. And I am on Gemini Pro, so it is pulling a lot of current information, like I said. Yesterday, March 30th, Fed Chair Jerome Powell spoke at Harvard University, delivered a highly cautious wait-and-see message. So a wait-and-see message is something that this guy has been saying for the last, I want to say, year and a half now. Basically talking about the tariffs, giving a one-time inflation, basically saying, hey, we got to really see what happens. And I mean, do you really blame the guy for saying this stuff? I honestly really don't. But I don't really want to dive too much into politics. The Fed probably should have lowered interest rates a little more last year. And it's because the Fed's fund rate is just very much higher than what the current, like, inflation is in our economy. Because you got to remember, the Fed's fund rate could be very much higher than where inflation is. And when you have the Federal Reserve that says, hey, we need to have pretty much like an equal stance where the Fed's fund rate is near inflation, if you actually look at the data, the Fed's fund rate is actually very much greater than where inflation actually is on these reports. And the guy also did cut right before the 2024 election. Let us not forget this. Right before 2024 election, October, the guy gave a 50 basis point cut out of nowhere. The word on the street was it was going to be a quarter basis point cut, but the guy cut 50%. So, I mean, there are politics that do play into this, but everything is political, and it drives me absolutely bananas. I try to very much be in the middle and very much zoom out of everything, and when you zoom out a lot of things, stuff does very much sway in politics, which it really should not be doing that. But a wait-and-see message. The core takeaway is that the Fed is effectively in a holding pattern due to a clash of risks. That is very true. A weakening labor market and a new inflation threat from the war in Iran. The big consensus is, do you believe the Trump administration? Do you believe this war is going to be wrapped up relatively quick? If you do, well, this is just one big buy-the-dip opportunity. If you do not, and you believe this war is going to be like Afghanistan, Iraq, it's going to be a big problem. Here's the breakdown. Oracle stocks, MBI. My Gemini is very, very much orientated towards SoFi, Oracle, and also I'm chiseling away at my MBA right now, so that's the reason why it says that. The Iran war, inflation shock. Powell acknowledged the 5-week-old conflict in Aurora. Gasoline prices, $4 a gallon. Very true. Gas price, oil is skyrocketing. The Fed stance, energy stocks, one-time supply events. The Fed usually tries to look through the risk. He warned that because inflation has been high for multiple years already, a prolonged energy spike could unanchor consumer expectations, making the 2% inflation target harder to hit. Rate cuts, very important. Before the conflict, market expected 2 to 3 rate cuts this year. Now things have shifted. Current status, the Fed kept rates steady, 3.5, 3.75 in mid-March. The outlook, Powell confirmed that the Fed's still in pencil, 1 cut for 2026, but he stressed that the FOMC is currently split. Very true. The Fed is split. Why? Because people in the Fed acknowledge that, hey, if the labor market is going down to Chinatown, we need to lower interest rates and we need to print more money. Half of the Fed believes the labor market needs to be taken care of. The other half is looking at inflation. That's actually very bad. If you really think about it, it's actually very bad. Because if we do fall off a cliff with unemployment, and let's say we do go into a recession, but we have very high inflation, cutting interest rates, it's not going to help inflation, but you got to pick and choose your battle. But here is the hidden thing about a recession. A recession resets inflation. Not a lot of people actually really want to say that because it's very demonic when you think about it. When you have a good old-fashioned recession, it does, in theory, reset inflation. What's the downward risk? People lose their jobs. People lose their lives. Do people kill themselves over losing their job and losing their home? Absolutely. Were there people that took their own lives during 2008? Absolutely. Were there people who took their own lives during the Great Inflation? Absolutely. People lose their lives when there is an economical peril. And this is one of the hard realities, is that we, the people, we're looked at as just nothing more than just numbers to these people. Which why I am a firm stance that a lot of this stuff is very demonic if you really think about it. The outlook, Powell, yep, rate cuts, one rate for 2026. The darned if they do dilemma. Powell admitted that if they cut to save the labor market, inflation might spiral. If they hike to stop inflation, they risk a recession. Very true. Economy and private credit. Powell addressed concerns that the economy might be heading towards a systematic event similar to 2008. I honestly believe that is going to be 2035. I don't believe we're going to have a mother of all crash anytime soon. I believe that's going to be when the boomer generation is going to be pretty much facing extinction. I don't mean to be disrespectful. The millennial generation in 2035 is going to be facing retirement. I'm a millennial. I'm 37. And also, Social Security is supposed to be going bankrupt in 2035. I believe we're going to have a mother of all crash in 2035. However, there are talks. Maybe there's going to be a mother of all crash right now. So, private credit risk, Powell addressed concerns, economy be heading towards a systematic, similar to 2008. Private credit relatively dismisses of a crisis, calling a current default a correction rather than a system. Oh boy, woo! Can't talk. Meltdown. Labor market. He noted the downside risk to employment, which is the primary reason that the Fed hasn't raised rates further despite the hot inflation data. Okay, so you can look at this as one or two ways. You can look at this as being the Fed just wants to be cautious, and this is going to be a one-time temporary thing. Liberation Day was nothing more than just a one-time thing, right? Because ultimately, we came out swinging. We gigantically sold off, and then we ended up rebounding. Why did we rebound? Because deals were being made, and Wall Street literally thought tariffs were going to be like a multi-year thing. It was over very quickly. What is my personal opinion about what is going on in the Middle East? I really feel it's not going to drag on more than maybe the next month or so. And the reason I feel this is because you have a Republican president going into midterms. It would be honestly really political suicide. And you're going to have the Republican Party pretty much walk away from the presidential administration and start throwing them under the bus. That is going to be really bad for midterms, and the Democrats are ultimately probably going to retake the House and the Senate. Now, the word on the street is that the Republicans are going to lose the House, but imagine if the Republican lost the Senate and also the House because of this current stuff in the Middle East. So you really got to be thinking, why would this be going on longer than it really needs to be? Do you believe the Trump administration? It's yes or no. Liberation Day, I honestly really believed, but I went in with a grain of salt because I saw it as very much, okay, obviously the market is selling off. The market is not going to be selling off forever, but we are currently in very much a mild recession. Oh boy, not recession. A mild correction. Liberation Day was very much a crash in the index. 20%, that is a crash. Okay, very much a crash. We're very much on the SPY, on the Qs, on the IWM. Very much a mild correction. Now, if we do get optimist like stuff here, and if April 6th really does spark a deal with Iran, well, then we could very well potentially be out of this a lot sooner than a lot of people really think. the market was really hoping for a lot of rate cuts, and obviously a lot of this stuff has been priced out. One of the reasons why the market might be green right now is because, one, this could very well be a dead cat bounce. That's a very unpopular term, especially for retail investors and traders, especially if you are in stocks that have been beaten down like SoFi, AMD, Adobe, Hood, Palantir, Meta, PayPal, Oracle. If you are very much in stocks or similar stocks to me, it's a very painful term because a dead cat bounce means that it's going to rebound a little bit and then ultimately go down lower. That means SoFi may go down to like $12, okay? You gotta bounce here and there. You can't just go down without having like somewhat of a green day. But the big thing to really look for is that if we fade off into afternoon, like time frame. Like right now, SoFi, prime example. Pretty much we pushed very much higher, and now we're kind of really pushing back a little bit. Okay? Obviously, we're still green on the day for SoFi at 2% here, very early. But if we go into this afternoon in close to being the red, like for example, if we pretty much close in the afternoon, let's say at 1532 or even below 1532, and we give up a 2% green right now that we have, that means essentially that we're pretty much just fading this green. And tomorrow could very much be more red. So, what am I really doing? I'm sticking to my game plan. When the days are green, I'm not buying. I've been buying when the days are red and the days are very bloody. And if you've been following me on this YouTube channel for the last couple months, I am very much a buyer when the market is spiraling down. And there could be more red to come. But I mean, in the market, one of the biggest things which sends the market higher is when there are when there is so much bad news. When there's just so much bad news, that's typically when the market tends to bottom. But we really do need software companies to very much be pushing higher. Okay? We need companies like Microsoft that has just been beaten down. We need Microsoft to regain the 50-day moving average, which honestly, you're talking about the 50-day moving average is a 10% swing. How crazy is that? How crazy is that? Microsoft is now down from all-time highs, 52%. Oh, wow. We need Microsoft to pretty much do a 10% bounce before myself and many others can really say that, hey, maybe there's going to be start to be a solid real uptrend. We need JPM to really have some stability and really get above the 200-day moving average as the top bank in the country. Because when there's a lot of recession fears, JPM is definitely going to show it, along with definitely Microsoft for software SaaS apocalypse. And oil really needs to come down. Okay? Oil is just freaking out so many people in the market. And if oil does trend back higher to 120 a barrel, this market could very much be taking a big hit. So, take everything that I said in today's video with a grain of salt. But, I mean, overall, Powell is just really giving us a red to yellow light. Pretty much saying that the Federal Reserve is stopping on rate cuts. It is a wait-and-see mentality. And it is just nothing more than a mere waiting game. But don't let the market spook you, and don't let people shake you out of your stock positions. There's a lot of people that utterly don't want anything to do with the stock market. I totally disagree with that. I don't believe that you should turn off the stock market and go and play golf or whatever. I believe that you should be playing golf when the market's at all-time highs. right now it is very important to be watching the market, because if your long-term positions are going down, what I'm doing to my long-term positions is buying the dip. I'm not going all in on a gigantic buy. I'm nibbling on in. And as they continue to go down more, I'll nibble on in. Now, on a closing note to this video, if my long-term positions start to show strength, and if my long-term positions start to rally a little bit, yes, I will nibble some shares, because that is good, because that's going to signal to me that, hey, maybe there is a bottom here. Maybe we do start pushing higher, because SoFi, for me, SoFi is a lot cheaper at $15.44 than it would be at $19.73 at the 50-day moving average. So right now, SoFi for me, many of you know by following this channel, SoFi, AMD, Adobe, Hood, Palantir, Meta, PayPal, Oracle, pretty much all, if this market is going to flip, then you buy all the way down and you also buy on the way up as well too. But these tiny little green days, it could just be nothing more than a bull trap. We had a bull trap actually last week. It was when was it? It was Monday. Monday last week. It was because President Trump tweeted something, something, put something on Truth Social, and we had a nice push higher, but ultimately it was a fake out. Oh yes. And then basically we ended up going back down, pushed a little higher, and then whoop, and now we're even lower. So there's going to be bull traps along this trend down, and also going higher as well too. You just got to stick with your game plan. That's all I got to say. My game plan is very much on YouTube and very much here. I love and I also enjoy posting educational content. So if you enjoyed today's episode, please smash the like button. Tomorrow, definitely going to go through my public profile here on this YouTube channel. Sorry if this video is over 17 minutes. I apologize, but there's so much to cover. Otherwise, I'll see you all tomorrow on a brand new episode. Take it easy, everyone. Be safe, stay healthy, and later.